Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching Indian Open and I'm needn't Shah. Let's go straight to the headlines. Jerome Powell takes a hawkish tone in his first testimony as the US Federal Reserve Chairman, fueling expectations of more than expected rate hikes this year. India's economy may grow at a faster pace in the third quarter. A Bloomberg survey pegs GDP growth at 7% for the quarter. HDFC sets a floor price of 1824.63 rupees per share for its qualified institutional placement program, which is now open. And Dalmia Bharat Bain Capital Combine is said to be the front runner to bag Binani Cement for around 6,350 crore rupees. That is a Bloomberg exclusive. Well, the big news of the day, or over the last 12 hours, if not more, remains Jerome Powell. In his first speech as the chairperson of the U.S. Federal Reserve, Jerome Powell expressed confidence in the U.S. economy. In the 3-hour testimony he delivered to the House Financial Services Committee, Powell said growth is picking up and that he expects inflation to reach the 2% target. Powell also reiterated Fed's plan to gradually raise interest rates. Listen in.
The economic outlook remains strong. While many factors shape the economic outlook, some of the headwinds the U.S. economy faced in previous years have turned into tailwinds. In particular, fiscal policy has become more stimulative, and foreign demand for U.S. exports is on a firmer trajectory. What we've seen is incoming data that suggests a strengthening in the economy. We've seen continuing strength in the labor market. We've seen some data that will, in my case, add some confidence to my view that inflation is moving up to target. Gradually reducing monetary policy accommodation will sustain a strong labor market while fostering a return of inflation to 2%. Engaging the appropriate path for monetary policy over the next few years, the FOMC will continue to strike a balance between avoiding an overheated economy and bringing PCE price inflation to 2% on a sustained basis. In the committee's view, further gradual increases in the federal funds rate will best promote attainment of both of our objectives.
The speech opened the door to the Federal Reserve raising U.S. interest rates maybe more than 3 times this year as well. As he acknowledged the stronger economic growth, he did mention that it may prompt policymakers to rethink the plan for 3 hikes. Bloomberg's Mike McKee reports on what other markets are taking away from the testimony.
I think Powell went into this trying not to lead the markets in any particular direction, and maybe he didn't do quite as good a job as he wanted to, or maybe just that the markets heard what they wanted to hear. But we leave the first day of the Humphrey Hawkins, or the hearings formerly known as Humphrey Hawkins, with the markets now pricing in almost a 4th rate increase for the year, because Powell was fairly strong in saying he thinks the economy is going to expand at a faster pace, and that's going to drive up inflation. He made no promises about rates, but just the implication was that the Fed could easily change its forecasts at the March meeting.
Well, and that was interesting. All right, so let's talk about that with Seth Freeman. He's Senior Managing Director at EM Capital Management, joins us right now on the show. Seth, what did you take away from this meeting, from this testimony rather?
Well, I think it was clear that Powell is sort of bullish, you could say, on getting up to some sustained 2% PCE price inflation, which has been the goal. And then, made it clear that, though, at the same time, that he's looking at gradual price increases, rate increases, as he said, that will best promote attainment of avoiding also an overheated economy. So I guess that would be the implication of a potential 4th interest rate. But I think it really suggests that we're looking at 3 times in 2018, frankly.
You're not moving up to 4. I mean, his comment about how market volatility will not stop more rate hikes and his confidence in the economy and inflation doesn't lead you to believe that there could be 4 instead of 3.
Not at this time. The PCE index is slightly lower than the CPI index. And the reality, and the difference being that CPI includes food and energy. And the reality is that people, humans, feel the higher prices in food and energy, even though it's not captured in PCE. So, the entire economy here is not booming, and it's still early to really see what the impact of the tax cuts will be. And I was listening to some statistics today about the pretty gross difference between the amounts of money that have been put into the hands of workers, these $1,000 per worker bonuses that were given by some of the large companies, versus the extra profits or the extra gains. I think it was 150 billion versus something like 5 billion. So I don't think it's as inflationary in the short term.
Okay. One last question, Seth. Is it virtually impossible to predict what the trajectory would be? I mean, wouldn't the Fed be a lot data dependent? And as you said, data right now is skewed or it's mixed at best. It's not pointing towards a one-way unilateral direction.
Yeah, it's very important to remember that, and it's almost trite at this point, but, the stock market is not the economy. And, we're all very happy that in general, even with, we've recovered more than halfway, I think, the correction from the last 10 days already. But the stock market does not reflect the economy. Car sales are very dismal. And it was just announced again that the sale of new homes dropped further. They went down, I think, 7% in December, and they were low in January. So not everything is inflationary at this time. I would say that in general, the sentiment is higher than it certainly was a year ago.
Okay. Seth, thanks for putting that into perspective. There's a difference of opinion. Maybe the market believed that there could be 4, but Seth Freeman out here says that data doesn't point towards necessarily 4 rate hikes. They are working with 3 as of now. And frankly, it really depends how you look at it. It could be 4, it could be 3. I think it's just virtually impossible to say that at this point of time. Reading all the comments that have come in international media as well, data dependent in a big way. But what did that do, this testimony do to financial markets? I think let's bring that up. That's the trade setup for the day, really. The US markets ended lower from where they were trading pre the testimony, and the Asian markets have caught on from there. So 1% down for the US markets by and large, 1.25% maybe. Asia's trading about 0.5% lower. Remember, the Indian markets did come off a little bit in trade yesterday. If not entirely on numbers, then on sentiment. The SGX Nifty right now indicating a downtick of about 0.5%. So we will start off on a weak footing, and that certainly seems to keep that template of sell-on rally intact. We were talking about this yesterday, that after 2 days of an uptick, there will be a test of this. For now, it seems that the sell-on rally template is intact. PSU banks certainly spoiled the show in trade yesterday, have seen some short build-up. Private banks took a bit of a breather as well. And FIs continue to net sell. I think 17 sessions now that we've had this net sell figure as well. Probably over $2.8 billion US month to date have been sold out as well. I was just trying to figure out if there are stocks which stood out for me individually from a trade perspective as well. I think 2 or 3, and it just showed the kind of selling that came in. There is an outlier gainer as well, but stocks like Ambuja, stocks like PNB, wherein there was marked uptick in volumes, and just showed that any bit of negative news is getting sold into a meaningful way. Ambuja ended up down about 4.5%. Volumes for that larger stock about 2.5 times in the cash market, 46% mark for delivery. PNB as well, volumes about 3 times the 20-day average. The delivery volumes not that high, but still quite a bit of selling that happened in the session yesterday. There were outliers like Astral, etc., but by and large, the mood at the broader end was somber. So what are the stocks that one should watch out for in the session today? HDFC, remember we broke this story day before yesterday. Yatin, one of my colleagues, spoke about the HDFC QIP plans likely to start off yesterday, and they announced the QIP. It's open, floor price fixed at about 1824 per share, so in and around the current market price. Typically, QIPs tend to have a positive impact because of the price to adjusted book value calculations becoming in favor of the company. Watch out for HDFC. Let's see what it does in an otherwise slightly dull scenario for the markets. Couple of interesting brokerage notes that have come out. I mean, there are 3 or 4. I've picked up 2. One of them is Motilal Oswal on UPL. They're talking about how the backward integration will drive profitability for the company. They've a buy with the target price of 945, which is about a 31% upside. Again, very interesting. It's a nifty stock, but Motilal Oswal stock notes tend to get about reactions in the stock. Let's see if on a dull day UPL reacts or no. Similarly, JP Morgan on consumer, they've initiated coverage with an overweight rating. The March 19 target price is of 300, which again is about a 30% upside. Let's see if this one has any reactions or no. L&T Infotech would be in focus. Larsen has said that they'll sell about 2% stake to achieve the minimum public shareholding. Let's see what happens thereof. And IDBI Bank, I thought was interesting, was an outlier amongst the PSU banking space. Moody's has changed the outlook to positive from stable. That notwithstanding, after having a really good run this year, post the PNB fraud as well, it came off a bit yesterday. Let's see if there's further reactions in IDBI Bank. But if that was the trade setup and a long one at that, thanks to the Fed, let's tell you what's lined up on First Word today. We'll talk about what's expected to fuel the 7% GDP growth in the third quarter. Ida will talk about that. Darshan comes in with Goldman Sachs' latest note on Indian equities. And we question whether SEBI erred in giving the approval for the Nakshatra World's IPO despite a probe against its promoter Mehul Choksi and others. Sajid will join in to speak about that. But now, first to the big story for the day, something that will come out later on in the day. In getting back to India, rather, the economy may have picked up pace in the third quarter, that is the October to December quarter. A rebound in industrial activity, along with strength in the services segment, is expected to prop up growth. Ida sums up the expectations.
The government releases economic growth data for the third quarter of the current fiscal, that's the December-ended quarter, and the general expectation is that you will get a number which suggests that the economic recovery is gaining pace compared to what we saw in the second quarter. Let's look at the estimates. Bloomberg polls suggest that you will see GVA growth come in at 6.7% in the third quarter compared to 6.1% in the quarter before that. GDP growth is expected at 7% compared to 6.3%. Important to compare it also to the year-ago quarter, because remember the year-ago quarter is when we had demonetization getting announced, although the big impact of demonetization came in Q4. But in terms of level of activity or level of growth, you are expecting both GVA and GDP growth to return to the same levels that we saw in the third quarter of FY17. Remember, over this 18-odd months, we've seen two shocks to the economy. First demonetization and then GST. And what all economists are watching to see is whether economic activity rebounds to levels that we had seen before these twin shocks. To gauge that, some of the sectors that are important to track are agriculture, manufacturing and construction. These are also heavy employment sectors, so important to track even from the employment standpoint. On agriculture, not much of a change expected. In fact, there could be a slight decline in growth levels from about 1.7 to about 1.5%, say economists. On construction, though, you are expecting a significant pickup. Construction had remained modest in the second quarter at about 2.6% growth. You are expecting a substantially higher number on construction. Manufacturing was strong last quarter, and the expectation is that that will continue to be strong, and perhaps growth in that segment would move up beyond the 7% that you saw in the second quarter. Those are the three major sectors to track, and those are GVA growth numbers. Apart from that, always important to see the expenditure side trends to try and understand what is happening in the underlying economy. One thing which had raised a glimmer of hope of a pickup in investment activity was the gross fixed capital formation number. That segment had seen growth of 4.7% in the second quarter. In fact, that was a 5-quarter high. People are now watching to see whether gross fixed capital formation continues to rise, and if so, is that a signal that there is at least a modest rebound in investment activity. Private consumption expenditure on the flip side was slightly weakish, not an outlier, but at 6.5% growth was slightly weaker than expected in the private consumption expenditure segment. But nobody really sees much or significant weakness in private consumption, at least not based on other high-frequency indicators. So perhaps that one will be steady as it goes. The final one to watch is government spending. Last quarter, you had seen government spending growth come down quite sharply, although there was base built into it as well. Remember, the second half of the year, the government's own finances have not been in the best condition. So some of the segments which get a boost from government spending may be weakish, and you may see government spending not accept accelerate as much as it has in some quarters in the past year to 18 months or so. The importance of the Q3 numbers is to the extent that it should fit into the full year growth estimates. The RBI now expects full year FY18 growth at about 6.6%. So you're basically going to retrofit that Q3 number to ensure that we are on track at least to meet that 6.6 number, or if we are on track to better that 6.6 number, because from here on, what everyone is watching to see is what growth recovers to in FY19. The RBI expects a pickup to about 7.2%, but any underlying trends in all of these data will help us solidify the forecast for the next fiscal year as well.
Well, that's the GDP estimate. Let's wait and watch what happens. The expectation, of course, is that we will have a much better performance compared to the previous quarters, as Ira summed it up as well. Okay, moving on to other news. Over $1 billion worth of foreign money has been pulled out of Indian equities this month, and Goldman Sachs believed this is not warranted. In a recent report, Goldman cites the pickup in the economy and a recovery in earnings for its call. Darshan is standing by with the key highlights of this note. Darshan, what is Goldman saying?
Yeah, so they're bullish. They're saying that the outflows are not a point of concern for the Indian markets at this point of time. They believe that the Indian markets have outperformed. The domestic flows are extremely solid, and they have a target price of 11,600 on the Nifty. Now, what they're saying is that the lag in Nifty is due to the FI outflows on negative headline, while on the other hand, the economy appears to be surging ahead. So they're saying despite the flows that are coming in, the economy continues to do well. So that is the first point that they're saying as far as their big note is concerned. What the positive factors they believe are, first of all, is the recent earnings that have come out have been decent. The domestic fund flow strength has been very, very strong. Rural revival is very strong, and the government spend. So a combination of these four is something that makes them positive on the Indian markets. Now, as far as where the green shoots are coming out, the management is saying that the commentary by most of the managements in the third quarter was bullish. So that is something that they believe is good, and they expect growth to pick up in the coming quarters as far as most of the sectors are concerned. They are saying that the stronger industrial data points to an improved economy. The recent data, that economic data that has come out, is very strong, and importantly, IT has been rather subdued, but they are saying now the growth will come in, and IT services could propel the market going higher because of the numbers that are coming in and the sentiment turning positive on IT. Apart from it, they're saying that the big 18% EPS growth. So they've said what could lead the 18% EPS growth in 2018. So they're saying the first point is the rural revival. The management commentary in the results that came out, private capex is definitely picking up, and it will be the election year. So a rural revival plus private capex plus election year will result into an 8% plus GDP for India. So that's the basic logic that they have given. They are bullish on India, and the Nifty target that they've given is 11,600, which means another 1,100 point upside is something that they believe could be possible on India. Now their bets, so the stocks that they have recommended, first of all, Reliance Industry. They're saying that crude has been going up consistently. It's because of the diversified feed mix and stable energy cost, Reliance is better placed than the other oil and gas companies, and that is why that makes it a top bet. BPCL is something that they like. They believe that it has underperformed the other oil marketing companies, and the earnings are likely to pick up from the second half of FY18, and the ongoing Kochi upgrade and expansion to help the EPS going ahead. So that's their second bet. The third stock that they like is HDFC Bank. Market share gains is definitely seen. Its operating matrices are much efficient, and there is traction in the retail and SME lending, which makes them bullish on HDFC Bank. The next stock that they like is Eicher Motor, vendor rationalization to drive margins and improving operation efficiency. So on the two-wheeler side, Eicher is their top bet. TVS Motors also they like. They are saying it's at the center of a multiple secular trends. And despite being anti-consensus on TVS because most of them have a sell rating, the other brokerages, they're saying that the premiumization and electrification to aid revenues for TVS Motors going ahead. The other stock that they like is L&T. The order inflows indicate that fourth quarter will be very, very strong for L&T going ahead. The other counters that they like is Avenue Supermart. It's India's most profitable grocery retailer, and low price online offering and modern format is something that will differentiate Avenue Supermarts from the others. others. While they also like Infosys, they're saying course correction is in shift to the digital side and improving outlook for financial companies, which Infosys has almost 1/3 of their revenues coming in from there. That is something that is positive for Goldman, and that is why they like Infosys. So majority of it, some of the important stocks that they have maintained, but nevertheless, despite all the negative news, they continue to remain bullish on India.
Well, Darshan, many thanks for putting that into perspective as well. Let's see, 18% plus EPS growth in FY19, and depending on what number comes about in FY18, whether it's anywhere between 470 to 504, the math that we presented yesterday, if viewers would remember. And on top of that, if we have an 18% number, that's pretty interesting. Anyways, we'll get to know about it when we get to know about it. For now, on to other news, and a very interesting story that's up on our website as well. Nakshatra World, a subsidiary of Gitanjali Gems, that's right. It got SEBI's approval for its IPO in June last year, despite an ongoing probe against its promoter Mehul Choksi and others. Sajid Johnson on the phone line with the details. And Sajid, does it sound uncommon? Okay, I think we'll just get in Sajid in moments from now. But hey, maybe it just sounds a bit of a disconnect here, if indeed there is a probe going on. And yes, you can say in hindsight that Mehul Choksi turned out to be a slightly tougher case than what otherwise would have been believed. But under a normal scenario, even if this whole Gitanjali fiasco and fraud wouldn't have happened, if there is a probe going on against a promoter, would the same promoter entity get a clearance for an IPO, which is essentially questioning that. I think Sajid will join us in moments from now. We talk about that. It probably is slightly uncommon to give for the market regulator to clear a proposal while the investigations are still on. Sajid, I mean, isn't it? It's slightly uncommon.
It is very uncommon, and normally the market regulator is cautious when it gives approvals for IPO or entities who are coming into the capital market, and especially with promoters or its promoter entities being investigated by the regulator itself. If you look at the timelines that has happened, Nakshatra World, which is a 100% subsidiary of Gitanjali Gems, filed for an IPO in March 2017, and within a period of 3 months, it got an approval from SEBI with final observations. Now, they may not have gone ahead with an IPO, but my understanding is that it was done in a little hurry, it seems, at least what some of the market experts are saying, that because ideally SEBI should not be approving such IPOs if investigations are on. If you look at SEBI's website, where it gives periodic details of processing of IPOs are there. There are a couple of IPOs which are still under process for more than a year or more than 6 months now, where the regulator has put the IPO on abeyance because there is a past violation and it's been investigated upon. So it was very unusual for market regulator to approve the IPO of Nakshatra World. Now, Nakshatra World is a 100% subsidiary of Gitanjali Gems. It was trying to come out with an IPO of 650 crores, valuing the company roughly around 2,200, 2,300 crores. And the entire amount which was being raised, as per the DRHP, was meant for working capital and not for growth. And that was another big, red flag for investors, because you're raising money from capital for capital market for working capital requirements and not for growth is something which is very, it doesn't go well with the investor philosophy, because normally companies come to markets for growth capital rather than working capital there. So it is a thing we have written to both SEBI, the merchant bankers, which are IDBI Capital Markets and Elara Capital. They have Shadul Amut and Mangaldas as a legal advisor in India, and they have an Indian auditor as well. And we haven't received any response from them yet.
Okay. Sajid, thanks for putting that into perspective. It's an interesting case, and the story is already up on our website, www.bloombergquint.com. Okay, as we wrap up First Word, an interesting story. You've heard of the phrase, if the Fed sneezes, who catches a cold? Here's such a story about Wall Street catching a cold due to just two words in a long and boring speech by Fed Chair Alan Greenspan, rating it two very people who followed him in that seat, Ben Bernanke and Janet Yellen, in a one-of-a-kind conversation in Washington, D.C. last night. Listen in.
Alan was also very focused on the stock market at the time, and he gave his famous irrational exuberance speech, I believe it was the fall of '96. He showed it to me in advance, and he asked me my opinion. And I read this long, dry speech, and I think it was something like page 26 of this speech he was going to give in the evening. I think it was at the American Enterprise Institute. And there was this reference to irrational exuberance, and I thought, nobody is going to be awake by the time he gets to this. And this is really just deeply buried. And I told him I thought this was simply too mild and nobody would get the point. And that was an error in judgment on my part. He gave the speech and the stock market immediately swooned. But after that, of course, after the stock market immediately tumbled, it regained all the ground it had lost and continued week after week to reach new heights. And Alan decided that maybe there was a good reason for the stock market to be that high. Now, I frankly never changed my opinion about that, but he did.
Well, also on Jan 31st, 2018, Alan Greenspan said that we have a stock market bubble too. Let's just hope that he's not entirely true. But that's all that we have on First Word today. Lots more lined up on the show. We discuss stocks and valuations with Pashupati Advani of Global Foray. It's been a year since Rajesh Gopinathan stepped into N. Chandrasekharan's shoes at TCS. We talked to the MD and CEO at 9:30 and discussed the road ahead for the auto industry and Maruti with R.C. Bhargava. All of that coming up later on the show. After the break, we take a full tilt towards the day's trade.
आइसक्रीम ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
सॉरी आई एम लेट। क्या हुआ?
कुछ नहीं यार, जस्ट वर्किंग ऑन माई एक्सपेंशन प्लान।
फंडिंग का चक्कर।
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख। ला।
अरे।
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल।
हाँ।
NSE Merge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels. And our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point of time. Most of the Asian markets have a negative opening at this point of time. The Nikkei is down almost 80 points. The Hang Seng and the Shanghai are trading lower by over 1%. Commodities as a pack is not doing well. Crude is not doing well. And the SGX Nifty is indicating a downtick of almost 60 points at this point of time. So, Neeraj, not a best of starts that we can anticipate at this point of time. So, global cues have been weak. Our SGX Nifty is indicating a weak. And yesterday, the strength was not seen on the market. So again, after 2 days of rally, we will see a little bit of correction today.
Yeah, the sell-on rally template certainly seems to be intact, right, Darshan? I mean, 2 days of grains yesterday. The PSU banks led the downtick at the broader end of the spectrum. Private banks were quiet, which led to the index and the Nifty bank being down. And certainly seems to be the case that we'll start off lower and probably head lower during the course of the day as well. Watch out, Europe may start off in a weak footing too. So we'll get to know about that. But let's talk about different components within this space as well. Gaurang Shah, Head of Investment Strategy at Geojit Financial Services, joins us right now on the show. Gaurang, good morning. Thanks much for taking the time out. For everybody, Gaurang was trying to predict a revival or a bottom fishing strategy in the PSU banks. Yesterday was a rude shocker as well. The question is, does this now lead one to believe that until all the skeletons are out of the closet, don't go out and be a brave heart and take a punt on the PSU banks? It might probably be prudent to bide your time. No, I don't think Gaurang can hear us. Gaurang, can you hear us? I don't think Gaurang can hear us. But it showed in the trade yesterday as well, Darshan. On the short side too, there's quite a bit of short build-up on certain PSU banks, and private banks too took a bit of a
so I was really surprised, when ICICI came out with a notification, and the fear, I believe that the fear is so much that, even banks who have no exposure are coming out of and saying that, hey, listen, we don't have exposure. But the other point for ICICI Bank is that they have exposure to Gitanjali Gems. They didn't name it how much their exposure is. They said that it's the least in the consortium, but nevertheless, private banks also probably may come under pressure because of the issues. Because the street does believe that this is not only restricted to PSU banks, because you've seen the asset quality of ICICI, you've seen the asset quality of Axis Bank. If something like this just shows up, imagine what will happen to private banks. That's the big concern.
Yeah, Gaurang, good morning, and if you can hear us now. What are you doing here? I would presume that PSU banks are out of the window for sure, but would it be prudent to take a step back and wait for the dust to settle and then take a call on the banking space?
Morning, Neeraj. Yes, I can hear you loud and clear. Well, I would defer with that, wait and watch kind of approach, and that is something that I have never really put in as a strategy for investment. And let me say over here that we do have positive coverage on State Bank of India, Bank of Baroda and Indian Bank amongst the PSU banking universe. We remain extremely positive on almost all the private sector banks, including ICICI Bank, which was just referred to. And yes, till the time the investigation is on, Neeraj, it's very difficult to zero down on that particular figure, which is which would possibly be the total figure of the entire scam that has been unearthed. But it is rather unfortunate. And if ICICI Bank is saying that it is the least in the consortium, then what stops them from coming out with that figure? That is what surprises me. Anyways, having said that, I think nibbling could be initiated on the banks that, I can only speak about banks on which we have coverage. So yes, you can possibly nibble into the Bank of Baroda, State Bank of India, Indian Bank. and maybe a little bit more, risk-wise exposure, if you will, if you have a little bit of higher risk appetite on the private sector banks. But yes, it will take time for the dust to settle down. And till such time, Neeraj, you would see choppiness and volatility, and possibly the Bank Nifty or the Bank X or the PSU index, bank index, would also put the frontline indices under pressure.
Okay, Gaurang, just one word, because if you're seeing the insider trades that come out, I think the promoters of Apollo Tyres is continuously buying from the open market. That's as per the notifications on the Bombay Stock Exchange. Any view on the tyre stock as such and Apollo Tyres as such? Because, the general trend is when the promoter himself is buying it, it indicates a bullish trend.
Yeah, that's the thumb rule as well. So yes, I would, and even before the promoters started buying, we have been advising our clients to buy into Apollo Tyres as a matter of fact. And there are almost about another close to about half a dozen companies that we are positive on. So Apollo Tyres, SEAT, MRF, JK Tyres. A while back we were positive on Balkrishna Industries as well. If I'm not mistaken, TVS Sri Chakra also features in that list. But on Balkrishna Industries, well, we have our targets are in place, so we are possibly advising clients to book profit. But the positive side on the fundamental is that yes, the entire backdrop in terms of the environment for the tire manufacturing companies remained extremely robust. Rubber prices are low. You've seen retracement in crude oil prices, and the new order market happens to be extremely strong, and equally robust is the replacement market. And this is not only good for the domestic market, I am considering the global opportunities as well.
Okay, Gaurang, just hold on. We have a very interesting link coming in from Yash. He's done a primary survey on terms of all the auto dealers, and he says that auto dealers may have carried cheered into February. A Bloomberg Quint survey conducted among 35 dealers spread across the country suggests that almost all vehicle makers will maintain pace in February. Yash Upadhyay, who's been speaking to all the dealers now, joins us with all the details. Yash, no, it seems that there will be no speed bumps this month.
Yeah, exactly as you said, Darshan. A very good morning to you, first of all. So just like January, February too is likely to be a reasonably strong month for most of these automakers, and we could see almost all of these automakers to post a double-digit volumes growth. As far as four-wheelers are concerned, Maruti Suzuki sales are likely to grow by as much as 13% on a year-on-year basis. Now, what's selling for them is in the non-Nexa showrooms, it is the Dzire and the Vitara Brezza, which is doing quite very well. And in the Nexa showrooms, it is the Baleno and the S-Cross 2018, which has been selling as hotcakes, having a waiting period of as much as 3 to 4 months. Another model which has a similar waiting period of around 3 to 4 months is their newly launched Swift 2018. Now, the company started with bookings back in January, somewhere in the third week, and according to a lot of my dealer checks, they have crossed the 50,000 mark as of February 28th. And also for Mahindra & Mahindra, the sales could likely go up by as much as 10%. Now, metro cities and south is where the sales are likely to be slower. However, the north and the east region continue to remain stronger. What's selling for them is the Boleros and the Scorpio. However, XUV 500, which is amongst the top 10 utility vehicles sold in January, has seen some of its sales slow down in these metro regions that I mentioned. Also, for Tata Motors, we are expecting a strong month, about a 16% growth in volumes. It is a broad-based growth across all of its recently launched models of the last 2 quarters. So we are seeing strong demand for its hatchback Tiago and the newly launched Nexon, which was announced last year in November. But that's that for four-wheelers. Looking at the two-wheeler space, we are seeing some significant growth. Almost all of them could report a growth of almost 20 to 30% on a year-on-year basis. In terms of Hero Motors, we are expecting a 24% jump in volumes. Their premium and mid-segment bikes are doing very well, but it is the scooter segment where they continue to lag TVS. They have announced the launch of 2 new scooters, the Duet and the Maestro Edge. The Duet being the recently launched Duet being in the 125cc segment, where it will go against TVS, which is the second number scooter seller. TVS also is likely to see about a 27% growth in its volumes. Now, they have launched a new scooter in that segment in the 125cc category, the Ntorq, and is priced quite aggressively in the range of 55 to 60,000 rupees. And dealers are telling me that they are getting significant inquiries, and deliveries have started to pick up as well. For Bajaj Auto, something like Bajaj Auto could also see a 23% growth in its volumes. We are seeing strong domestic demand demand for this one. Now they have launched some new models in the entry-level segment, the Discover 125cc. A lot of the e-commerce delivery guys and food delivery guys use the entry-level bikes, the Discover and the other Bajaj bikes. So we could see some strong growth coming in there, and also Royal Enfield could see about 28 to 30% growth in volumes.
Okay. Thanks a lot for that, Yash. Remember, this is a dealer survey, not something that brokerages have said, but we, the Bloomberg team and Yash individually call up dealers and get the feedback and then compile this survey as well. So watch out for some of these as well. Avinash Gorakshakar is here with Johnson in the conversation as well. Avinash, we just heard speak about what the auto sales are likely to be in the month of February. Not surprising as well, but anything that stands out for you from the auto space? I know you like auto components in Bharat Forge.
Yeah.
What about pure play autos?
No, I think, two-wheelers plays, I think TVS and Bajaj Auto look interesting. In fact, the kind of headwinds we are also getting from the ground is that two-wheeler sales would obviously pick up quite admirably. I think Bajaj Auto and TVS definitely, clearly look pretty attractive, especially Bajaj Auto, which has underperformed for a long time. Within the four-wheeler pack, we continue to be positive on Mahindra. We believe that within the tractor category, I think this is one stock which has actually underperformed relative to Maruti. So Mahindra and Mahindra could be an interesting bet, clearly in terms of the tractor farm equipment business, and most importantly, they have a clutch of other companies also. So the consolidated structure looks pretty attractive. So I would believe that M&M even at lower levels could be a good buy. I mean, probably if the outlook is slightly medium to long term, because FY19 should be a lot better compared to FY.
So I just have one query, because the general trend that we speak to analysts, we read a lot of newspaper reports. The general trend is that the growth is anticipated to be much faster, almost double for the scooter segment rather than the motorcycle segment, and that is the reason not a lot of people are bullish on Bajaj Auto, and they prefer the other ones which are racing up. So would that not be a big problem for Bajaj Auto going ahead?
It could be, Darshan. I think the scooter category definitely is a smaller category, and obviously the level of competition also is pretty, not that well concentrated. So to that extent, yes, I think Hero MotoCorp or typically, the other two-wheeler players could possibly get a little bit of more traction there. But I think clearly Bajaj Auto has also been working on its product launches. Probably, the quadricycle is also clearly awaited. I would believe that, clearly the export problem did hurt Bajaj Auto, and I think hopefully if that gets sorted out, then I think you could probably see a better traction from Bajaj Auto. But yes, the scooter segment, especially the Veromatic segment, is growing pretty well.
Okay, so that's the view that's coming in on Bajaj Auto, but our team is ready. Lots to talk about. The coal mining norms were disclosed yesterday. So what will that be? What will the impact on Coal India and the other companies? UBS came out with an interesting note in which they believe there are 10 concerns for the Indian markets, and we also talk about the general stocks that will be in focus. So let me start with you, Nikki. Yesterday after market hours, the coal norms have come in. What are the norms and what is the impact on listed companies?
Sure. This comes a week after the commercialization news came in, and the guidelines have now been put out. It says that it will be an ascending forward auction, and the bidding parameter for this will be rupee per ton. The floor price will be determined as per the December 2014 circular that was being put out for e-auction guidelines, and highest price offer will be considered as the winner. It said that there will be no restrictions in sale or utilization of coal, and that the successful bidder will have a production flexibility at least in times of downturn. However, at no given point of time, the production should go below 50% of what has been expected as per the capacity, as per the mining plan, and in 5-year period the production capacity needs to be at least 70% as per the mining plan, and that the annual adjustment of the final offer will be linked to your WPI, and lastly we have up to 100% FDI will be allowed in this particular mining activity, including associated processing infrastructure. Now what analysts have to say on this, they feel that it's not and nothing is surprising in this particular guideline, is almost similar as what we've seen in December 2014. It's a step towards the it's it's a good step and towards the right direction, and is not expected to impact Coal India, because obviously the company going forward will lose out on the monopoly position that it has right now. But at the similar given point of time, the Coal India auctions will turn out to be dearer, and it will have an upper hand, at least an e-auction price, given that the auction now, the bidding price will be linked towards your market price, which will increase the industry cost production curve. With this, they also expect large global mining companies to participate in the coal sector mining process, and you will have likes like BHP, Rio Tinto, Glencore, and Anglo-American, which could be the potential participants towards these auctions.
Okay, so these are the stocks that you need to watch out for. But Shraddha, which are the important stocks that you should focus in trade today?
Darshan, Neeraj has already spoken about HDFC's QIP, so don't want to brood too much over that. But their issue, the QIP price is close to the market price. Just want to mention that. DLF is another one. They've said that their subsidiary has emerged as the highest bidder for 12-acre land in Gurugram for about 1,500 crores. L&T Infotech is another one where they have said that the promoter L&T will offload up to 2% stake, and that is to meet the minimum public shareholder requirements. They held about 83.7% stake in December. Clarification coming in from ICICI Bank. They have said that they have no exposure to the Nirav Modi group of companies, but they are a working capital lender in a consortium along with other lenders as well. Sadbhav Infra, which has been declared as the lowest bidder for NHAI project in Gujarat, so you could see some positive reaction there. Binani Industries is another important counter to watch out for, along with Dalmia Bharat. This is on the back of Bloomberg reports that Dalmia Bharat consortium has emerged as or is poised to win the race as far as acquiring Binani Cement is concerned, and they made an offer of 6,350 crores. Dilip Bilcon has emerged as the lowest bidder for a 2,000 crore road project in Andhra Pradesh, and this is really an interesting one. CHT Developers, it's a small company, a market cap of less than 200 crores or so, real estate realty company. Now Ashish Kacholia and Bengal Finance and Investment, which is his company again, they have together bought or invested in 7.25 million warrants and 7.25 million equity shares at the price of 14.25 per share. So the total investment could entail closer to about 40 crores or so. So we could see some sharper reaction on this name, Darshan. So CHD Developers is one to watch out for.
Okay, CHD Developers will definitely watch out for. And Saloni, a report by UBS indicating that they have some concerns on the Indian market. What does it say?
So firstly, they believe that investors are worried about potential capital outflows from the equity market on MSCI's recent statement in response to Indian exchanges announcing that they will not provide any data to foreign exchanges. While secondly, PNB fraud poses another dimension of risk according to the note. Also, introduction of long-term capital gain tax in the recent budget worries some investors. They believe that monthly inflows into equity mutual funds has slowed down, but it still remains higher than the 2016 average. Now, speaking of stocks, they believe that small cap stocks have underperformed so far in 2018, and they are trading at 20% discount from their 52-week highs. In terms of macroeconomic data, rising inflation, higher bond yields and higher crude oil prices are also weighing on the local equity markets, and they believe that earnings growth is on track for a recovery. However, they expect a 10% cut in their FY19 earnings estimate. And lastly, they believe that BJP win in the central elections next year has been priced in, and any changes in the political outlook in the coming year will remain a potential risk for the Indian markets overall, Darshan.
Okay, so those are the important stocks in the important UBS strategy. Avinash, one of the key things that we're seeing is that, a lot of these infrastructure companies have started getting a lot of orders. Either they're getting the orders or they are the lowest bidders. Would you be bullish in any of the infrastructure companies as such?
Yeah, I think, Darshan, within the infra EPC player pack, I think Sadbhav Infra looks pretty interesting. I think, in the news flow, they have been quoted and they have been one of the lower bidders. I would believe that Sadbhav Infra definitely, from a longer term perspective, the stock definitely could give a decent kind of risk reward. Looking at the kind of FY19 order book and the revenue visibility. So Sadbhav Infra could be an interesting pick.
Gaurang, just one quick question on Dilip Buildcon. Do you track this one? It's L1 for another 2,000 crore order, and the orders keep on piling in for this player.
So yes, we do remain positive on Dilip, Pashupati, on PNC Infra, KNR Construction, NBCC, and CC. Capacity infra, including L&T, since they have an infrastructure business vertical as well, Neeraj.
A patchy line, but I think Gaurang mentioned a few names that he seems to be bullish on. Nevertheless, it's actually slightly over 8:45, 2 or 3 minutes over that, but that time of the show. But we dive into technicals and derivatives. Let's start off with Gaurav Bissa today. He's a derivative analyst at LKP, joins us right now on the show. Gaurav, good morning to you. Thanks so much for joining in. How are you approaching trade today? We are likely to start off maybe about 0.5% or slightly more than that lower. What does one do post that?
Good morning. The fabric of the market still remains the same. We have a strong support at 10,350 spot levels. On the other hand, 10,600 is something that has to be conquered for Nifty to move towards the level of 10,800, 10,900. So overall, Nifty is going to trade in a range, and always approach the markets. If you are trading in a range, always approach the markets when they are either at the higher end of the range or the fag end of the range. So right now, it's in the middle of the continuum. I would wait and watch. The immediate supports for Nifty are at 10,430. Any dip towards 10,470, 75 can be bought. Stop loss of 30-35 rupees on the upside. Targets of 10,550 can be seen. Small stop loss, small target, for the reason that Nifty is trading in a range. I would not be a very aggressive buyer either in the stocks or on the indices, for the reason that there has been incremental volatility that I have again come to plague the markets, and it is always prudent to let the market settle down. And I do not prefer playing with the gaps. We are going to open with a 55 points gap down node. If you're sustaining those levels, we can see a strong bounce in the second half of the trading session. I will at least give 15-20 minutes to settle down the markets and then place a trade for the indices.
Hi Gaurav, this is Darshan here. What would you recommend for trade today?
Recommend selling Ambuja Cement. If you look at, there has been a 21% short position that is seen getting built. Rarely do you see such amount of short positions getting built in a name. We saw similar kind of OI data happening in PSU banks, and from there on we saw a plunge happening. I do not see similar kind of move coming in Ambuja Cement, but one, it is seeing a lot of short positions. Second, it's trading below the crucial support levels of 260 to 258. So by using that as a stop loss of 257, 58, one can sell for targets of 246 to 245. I think that can be seen next 2 or 3 trading sessions. On the positive side, or for the buying, I would recommend buying IGL futures. In otherwise weak markets, we saw that there was a good bounce coming in from 295 to 298 levels. These are the immediate support levels for IGL. 7% OI addition happening in a day. Again, that's a positive sign that in a soft market, we are seeing good amount of long positions getting built. Stop loss of 303, one can buy IGL for the immediate targets of 315.
Okay, just hold on, Gaurav. We'll move on to a special segment now, Bloomberg Edge, where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up. Jayesh, what's on your radar today?
Morning, Darshan. So I'm watching out for the Nifty PSU Bank Index. That is because it is on track to post a 17% monthly loss for the month of February. Now, you know, this is the 6th biggest monthly fall that we are, likely to witness. There have been only 5 instances which have, shown a decline of more than 17%. In fact, can we have a change in the trend? That is what we are actually tracking. Now, if you have a look at the chart, what it actually shows you for the months of March, April and May, there have been only 3 instances where you have seen a negative return. So you have a negative 11.5%, flat month, but still negative. And you have a negative of 4% in 2017. However, it's important to note that the average return for the last 5 years during these 3 months, that has been positive to the tune of about 8% for March, 4.5% for April, and May has seen an uptick of about 3%. So is it time that the trend is likely to reverse? That is actually the question that we are asking.
Okay, many thanks for that, Jayesh. We'll certainly watch out how the PSU Banking Index shapes up today. Gaurang, any view on Motherson Sumi? The stock has corrected almost 20% post a weak third quarter. In trade yesterday, did manage to inch up a little bit. Would you recommend investors to start accumulating into Motherson Sumi?
Darshan, amongst the auto and the clear names, Motherson Sumi,
long time. And our sense is that, and we initiated the coverage close to about 200 to 25, and then it has given a stellar return. We still maintain a positive view and extremely excited about the 2020 business strategy that the management has spoken about.
Okay, Avinash, do you like Motherson Sumi? Is it a good time to start accumulating?
Yeah, I think Darshan, looking at the longer term kind of prospects and European markets where they have a very large exposure, I would believe that this could be a good kind of portfolio kind of pick, provided one has a 12 to 18 month kind of view. I think in the near term, there have been some disappointments on the overall EBITDA margin, but I think if you look at the FY19 and FY20 targets which the management has put out and the kind of business model this company commands, I think definitely worth accumulating for the longer term.
Okay, Gaurav, any view on the PSU banking space? Any stock that looks extremely strong or extremely weak on either side?
No, all the stocks were looking quite weak, and they have already seen significant overadditions happening. They are given breakdowns. I would not be interested in having a position at this point in time because it's more of a news-driven thing happening rather than a technical parameter being taken out, and that is having a toll on the names. One name that is still standing out would be SBI. I don't know for how long that would be spared from the breath of the short sellers, but it has a strong support at 260 odd levels. With the kind of gap down opening we are seeing, I think it can be a decent buy at around 263, 264, surplus of 260 on the upside, targets of 275 can be seen. That would be only recommendation that I would be giving the PSU banking names because there's a lot of volatile things happening in the PSU names. I would not be too keen in taking a name, but SBI is one that is looking decent as it is trading near the support levels.
Okay, and Avinash, just a word on Rain Industries. The company will come out with numbers today. Do you track the company?
Yeah, Darshan, I think the stock has actually underperformed a bit in the near term, but if you look at the kind of commentary from the management in the previous quarter and the kind of headwinds we see from the overall CPC markets, I would believe that even this quarter should be a reasonably good quarter. FY19 should be a lot better. So I think investors should obviously look at this stock from a slightly longer term angle. I think in the near term, this stock had actually moved up quite fast, so some amount of consolidation has happened. But overall, I think FY19 should be a lot better.
Okay, so that's the view for Rain Industries. Gaurang, do you track Sona Koyo by any chance?
I'm afraid not. We don't cover Sona Koyo, so difficult for me to comment on that one.
Sona Koyo, no. Any view on UPL, because that counter has also corrected significantly. It's a nifty stock. Do you think that at this level any accumulation should be done?
So we definitely would recommend that. UPL, PI Industries, Tata Chemicals, Aarti Industries. I think all those, complementary themes which go into, either industrial specialty chemicals or chemical specialty chemicals which would complement the fertilizer and urea industry should definitely be on your radar on the backdrop of the announcements made by the Honorable Finance Minister in the budget.
Okay, 3 minutes to go for the markets to kickstart trade. Watch out for UPL. Motilal Oswal has come out with a note on a target price of 945. That's a substantial upside to UPL as well. And of course, JPM has come out with a note on Crompton Consumer. By the way, news on your screen from Doordarshan. CBI has arrested Karthi Chidambaram in the INX media money laundering case. I think for non-cooperation. We'll get this news out, but we'll of course get in more details on this news as well, and get in people to speak about this one too. I don't know how big a political hot potato this could turn out to be, arguably a very, very big one. But this is the first set of flashes that we have. Karthi Chidambaram has been arrested in the INX media money laundering case. You would argue that there is no immediate impact, but this is a big one.
Yes,
this is probably one of the biggest political fallout news that you can get. I think Sanjay Pugalia will be with us in moments from now. We'll be talking to him as well and trying and getting a bunch of other people. But this is arguably one of the biggest pieces of news that we will see over the course of the day as well. Let's see. This should be very, very interesting. Avinash, any initial thoughts on this?
No, I think difficult to take a call, but I think this seems to be now, I think some sort of political kind of development. And I think, if at all something comes out, it's going to be obviously, some sort of, counter arguments from the opposition, because clearly this was hinted from a very long time. So I think, I don't think, this can have a significant impact on the markets, Neeraj. All said and done, this would definitely not change the sentiment overnight. So I think this may not have that kind of impact on the markets.
Okay. Just trying to get in some more details as well. Remember, a couple of days ago, I think that the chartered accountant was sent to custody as well. Last week, the Supreme Court had refused to stay a summon order issued by the Enforcement Directorate against Karti Chidambaram. CBI had said that he was not a common criminal, but his plea for quashing the notice was a guise for an anticipatory bail plea. So that was done last week as well. On Monday, Delhi's Patiala House Court had sent S. Bhaskaran, who is Karti Chidambaram's chartered accountant, to a 14-day judicial custody in connection with the same money laundering case as well. I think the arrest has happened on the on the account of non-cooperation. We'll try and get more details on this one. But 12 seconds left for the market open, so let's just first address that. Then we'll try and get in some important voices on this as well. As we speak, there is a downtick across the Asian bourses. The SGX Nifty indicating a downside as well of about 80-odd points. And here are the pre-open rates on the screen. Expect a tick of red and a fair bit of red across the screen as well. So down about 90 points in the first ticks on the pre-open session. You would probably presume that about 60 to 70 odd points of a downtick on the Nifty is given. Looking at what the SGX Nifty was anyways hinting towards. Sensex 2 starting off 100 points, but I think it'll be a lot worse. Bring up the private sector banks. All of them had corrected big time in trade yesterday and pulled the indices lower. ICICI Bank should be top draw, but the others like Axis, etc. should also come up on your screen. So ICICI about 1% lower. Axis, which was down 2.5% yesterday, down. HDFC Twins should come up on your screen. HDFC Bank flattish. HDFC at the QIP starts. Two starting off on a flat note. So it's not been a great start, but no big cracks as of now in the pre-open session on the banks. Reliance, which was in the green, should also come up on your screen. Let's see if that is holding out, because yesterday it was. For now, it's showing a 2% downtick. Let's see. This will, of course, change. But by and large, the mood seems to be somber in the session.
Yeah, okay. So let's pull up Fortis Healthcare. High probability that the company will report numbers today. That's what's been spoken about. But the counter down almost 4%. These are the pre-open rate. Let's pull up Rain Industries. They will also report their numbers today. Has been a marked outperformer, again above the 400 mark in trade. Let's get in Sona Koyo, because now officially the company's name has been changed to JT EKT India. So it officially is a multinational now. A lot of guests on the show have recommended Sona Koyo because of the change in management. There is Apollo Tyres, because again the management seems to be again accumulating. Let's see how Apollo Tyres has opened in trade. A lot of initiating coverage reports. JP Morgan sees a 29% upside in Crompton Greaves Consumer. Let's see how that has reacted. So Crompton Greaves Consumer is trading absolutely flat. UPL Motilal Oswal sees a 31% upside. So yes, a little bit of uptick that is seen. And ICICI Direct sees an 18% upside in music broadcast. So that is something that we should watch out in trade today. So music broadcast is trading much higher. Apart from it, there is an initiation on TVS Motors by Nomura with a reduced rating. That is something that we need to see. It's reacted negatively. Let's see how Motherson Sumi has reacted. Yesterday was showing some bit of recovery. Whether that has happened today, no, it has not been able to take any kind of uptick. And again, let's pull out some of the PSU banks. Punjab National Bank of prime interest today. How as that SBI is down 1.5%. Punjab National Bank is down another 8%. So the carnage continues in Punjab National Bank. Bank of Baroda and Bank of India, 1.6%. Let's pull up Bank of India, and that is down 1.6%. So Neeraj, not a good day again for at least the Nifty PSU Bank. Again, we're seeing hammering.
Yeah, I'm not surprised that that will last or that won't last. By the way, the news flashing on your screen, and we'll keep on addressing that in moments from now. Sanjay Pugalia will be joining in to talk about his thoughts. But while we wait for that, let's get in Somit Sarkar, who joins us with the big brokerage calls for the morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is JP Morgan on Crompton Consumer. Now, the brokerage has initiated coverage on the stock with an overweight rating and a target price of 300, which suggests a potential upside of close to 29%. Now, according to the brokerage, Crompton Consumer is in a sweet spot on the back of favorable policy environment and on renewed focus and growth strategy of the new management. Now, along with this, progress on new related segments will enhance growth prospects for the company and drive the stock performance. Now, the brokerage is expecting a mid-teen revenue CAGR of over the next 3 to 4 years, while it is expecting the EPS to grow at a compounded annual growth rate of 25% over FY 18 to 21. Now, the company has consistently delivered positively on the margin front, and going forward, margins are also expected to expand to around 14.2% by FY 20. Now, according to the brokerage, Crompton is a quality stock with solid earnings growth outlook, and the brokerage is expecting high return on capital employed going forward from the company. Along with that, there will be free cash flow generation and steady dividend payout from the stock. Lastly, it says that the stock is trading at a discount to peers despite superior earnings growth. Second, we have is Motilal Oswal on UPL. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 945, which suggests a return potential of close to 31%. Now, according to the brokerage, UPL is in a sweet spot to grab impending opportunity in the generics market. Now, product worth $3 billion are going off patent, which is a big opportunity for UPL. Generic products and backward integration will drive the profitability for the company, while new launches and branded products will drive the growth for the company going forward. Now, the brokerage is expecting the company to provide robust growth across all markets, and the brokerage also has a bull case target price of close to 1,213, which suggests a return potential of 68%.
Okay, thanks, Amit. Thanks for that. Okay, on to the important news of the day, and Mr. Sanjay Pugalia from the Quint joins us right now on the show. Sanjay, thanks so much for taking the time out and speaking to us early morning. What do you make of this news?
This was a much anticipated development that government has been investigating Karti Chidambaram since long time, and there was lots of speculation that at some point in time he will be arrested. The interesting point today is that he has been arrested by the CBI for not cooperating with the investigation process. This case pertains to some 2007, 10, 11 years ago, for some FIPB approval that his father, the then finance minister, Mr. P. Chidambaram, gave. He made some commission or some money out of it. Just before this, his CA was arrested 2 weeks ago. So I think in the follow-up that action, this has happened. But yeah, the way we are now kind of nearing to the elections, the anti-corruption crusade by the Modi government will get more and more amplified, and you will see more of such actions.
What's the political fallout of this arrest? How will this play out on the political side?
The government will try to project this as a part of a big anti-corruption crusade soon after Nirav Modi, the way he escaped the country. Government came under pressure that be it Malaya, be it Lalit Modi, be it Nirav Modi or Mehul Choksi, everyone is successfully out of the country despite so many warnings and red signals and alerts. So government's anti-corruption plank has taken a hit, in fact a significant hit. This is not a do or die issue for the government, but this is one of the main core issue for the government. And post demonetization, if you look at the whole sequence, it is about projecting this government as seriously anti-corruption crusader kind of government. So the fallout would be try to diffuse the memories of Nirav Modi, bring in other money laundering cases, talk about the sins of UPA. This is how it will proceed further. And of course, opposition will talk about vindictiveness and vendetta and selective use of such cases or the allegations.
One last question, and I know you have a busy morning, but this isn't just an ordinary arrest, right? This has the full makings of becoming a political hot potato or a pot boiler of sorts. One would presume that the government would have taken this step knowing that there is no way in which in the immediate future there will be some bit of a backlash of such a thing as well?
Yeah, no, I do not think that this case will result in any kind of backlash from the opposition side, because the counter-attack from the opposition is either not organized or sometimes muted or sometimes confused. And all said and done, we have to agree on this point that UPA ruled for so many years. So whenever a current government decides to go after the Congress party, there are too many things, too many skeletons in the cupboard. You can keep bringing them out. So Congress sometimes gets into the defensive, onto the defensive mode. Sometimes they try to get offensive, but after a few days of offense, they again kind of go back to pavilion. So we have to see how Congress responds to it. Congress line could be that this case pertains to Karti, who is son of Mr. Chidambaram. They can also say, no, this is not an individual issue. This is purely political vendetta. And Congress gets a handle to really start attacking the government in a big way on the plank of being vindictive. We will have to see. Congress reaction is best kind of, we have to wait and see how they are going to react. I can't really speculate on that.
True, and won't make you do that either. But thank you, Mr. Sanjay Pugalia, for joining in today and giving us your thoughts.
Thanks, Neeraj.
That early. Okay, that's Sanjay Pugalia, Editorial Director of Quintillion Media. Okay. Having said that, let's focus back to the markets. Just want to mark the currency as well. Remember, it started off on a weak footing. Yesterday ended 64.89, today 65.10. Now about 22 pairs lower. So that strength, intermittent strength, has been sold into as well. I believe this is largely what's happening across the world for all the other currencies vis-a-vis the dollar as well. The pre-open rates have settled for the Nifty about 65 odd points lower. And about 0.5% or almost 200 points lower for the Sensex as well. Do we have Chandan Taparia? He should be joining. He would be joining us as well. But okay, I think while we wait for that, Gaurav, Bissa, one quick thought. I know we took your Nifty call in the morning, but now that we're starting off over 65 points lower, would you be comfortable initiating any trades on either the Nifty Bank, or any of the large cap banking names?
For indices, as I mentioned, that let it settle on for 10-15 minutes. Then only we can see whether it's taking supports at around 10,470 or not. If it is taking supports at 10,470, 475, then I think it's a decent candidate for a pullback with a stop loss of 30 points and targets of 70-80 rupees. I think that can be a decent trade, maybe a one-day trade. For Bank Nifty, 25,000 is a very crucial level. So any dip towards 25,000, I think that can be bought. We have seen a lot of times strong reversals happening from this area. So I would be a buyer, at least in the call option side, I would be a buyer. But for individual trades, I would still wait for some time before placing a trade.
Okay, stay on, gentlemen. Let's tell you all that you need to know, because we're just minutes away from market open. The top stocks and news stories on your radar today. HDFC says panel to consider QIP issued today. The QIP is open. The stock starting off marginally higher.
Promoters of Apollo Tyres, Nandan Denim and Alembic Pharma up their stake in the company.
JP Morgan sees a 29% upside in Crompton Greaves Consumer, while Motilal Oswal sees a 31% upside in UPL. ICICI Direct sees an 18% upside in Music Broadcast, or MBR.
Jyoti Labs and Maithan Alloys will be meeting a lot of analysts and investors today, so watch out for these two counters.
And First State Investments has bought about 0.5% stake in Narayan Rudalaya, while Harrison's Malayalam promoters shed 7.5% stake.
And Goldman Sachs sees the Nifty target at 11,600, recommends stocks like Reliance, BPCL, HDFC Bank, iShirt, TVS, L&T, Avenue Supermarts and Infosys.
Gaurang, before we thank you, one quick word on Avenue Supermarts. It's been on a roll. The stock continues to find buyers. Would you be a buyer at these levels?
I would definitely be, and we had recommended subscribe during the IPO, and it's been a stellar performer. I think yesterday it was at a new all-time high. Correct me if I'm wrong, Neeraj. And I think there are a lot more lifetime highs to be seen on this count.
No, you're absolutely right, Gaurang. And okay, so a lot more highs to be seen in the counter is Gaurang Shah's view on Avenue Supermarts. Gaurang, take a moment to thank you for joining us this early in the morning today. Appreciate your time. Avinash, Avenue Supermarts, notwithstanding, Interglobe Aviation is the other one which has been making new highs, dashes towards those. What is your view here?
I think aviation stocks should do well. I think in the aviation space, Indigo as well as Jet should continue to do well. I think capacity utilization levels have started improving, and that has actually resulted in the load factor going up. And I think this momentum is going to continue at least for the next couple of quarters. So any dip should be used as an opportunity to actually play the aviation space, despite the fact that crude prices have gone up. But looking at the kind of soft trends in crude, I think probably the next couple of quarters should be better for aviation companies.
Okay, just want to mark CHD Developers, a very small company, a 200 crore market cap, in which Ashish Kacholia has bought stake via shares and warrants. It's, I think, locked on upper circuit of 5%. Small company, but certainly will be in radar today. So this is something that we need to watch out for. HPCL surprisingly is down almost 4%, and ICICI Bank, after the clarification, is down 2%. That's the view that's coming in. Gaurav, any view on HPCL?
Decent support for HPCL at around 370, 372. So I think any dip towards 370 can be bought and have a small stop of 367 on the upside. A small target of 385 can be seen. I would not be a very aggressive buyer. There's a strong resistance at 400, 390 area. But yes, for a pullback, one can buy.
Okay, ex-dividend HPCL and hence down about 4%. ICICI Bank is the other one, likely to start off on a soft note. But Gaurav, Bissa, if you had to bet on one stock for the day today, which one would that be?
Apart from the ones I have mentioned, I think NBCC is one that one should be looking at. It's trading at a very strong support area. There's not much of a short push in the system. Price has fallen more than what we have seen in terms of open interest building up in the name. With a stoppage of 193, 194, one can buy for targets of 220. So that would be a wonderful risk to watch. It will take some time, but I think this is one stock that should be on radar.
Positional call or an intraday call?
It will be 3-4 day call.
Okay. Okay, fair call. Gaurav Bissa, many thanks for joining us today and giving us your thoughts as well. NCC, the stop call in the session today is Gaurav Bissa's. Okay, the market starting off, the Nifty Bank, the principal culprit, down about 1%, but the Nifty and the Sensex too starting off about 0.7% lower. So it's not been a great start for the markets in the session on expected lines. The mid caps and the small caps, which had underperformed, are starting off about 1% lower in today's session as well. So it's not a great start. The heat map would probably be enveloped with a fair bit of red. In fact, almost the entire screen is a clutch of red, except for Cipla and Wipro, and that too marginally. Wow, this is a sharp fall that we're seeing across the stocks on the index. No movers, don't have to identify too many stocks, but for ICICI Bank, which is down 2%. You could argue that on expected lines as well, with the clarification that is coming in with regards to Gitanjali. Some bit of a knee-jerk reaction was expected, but banks by and large are coming off. So SBI is down about a couple of percentage points. Yes Bank, Axis, this whole clutch of banking names seem to be in a spot of bother. No winners. That's essentially the key thing as well. We're not really down 2% on the Sensex. In fact, it's just about 223 odd points. But the screen is awash with red, which just shows there's a broad-based pause or profit booking, not really deep selling except a select few stocks. 3 or 4 names that I want to highlight before I throw it back to Darshan. Stocks which corrected in trade yesterday, the PSU banking counters should come up on your screen, and a clutch of red again today. Union Bank marginally soft, but Bank of India, Canara Bank, Bank of India is down about 3%, so that's a sharp fall for this one. But Canara Bank too down about 2.5% in the session today. If you're speaking about how promoters have hiked stake in certain companies, let's see if there is some cheer there. No, in fact, all of these stocks start off soft. But in a market like this, you'd probably expect that there will hardly be any green. Let's see if the brokerage notes have managed to do that for certain stocks. So, or Dilip Buildcon, firstly, lowest bidder, 2,000 crore order, though fails to cheer the stock. And I doubt that the brokerage notes would have cheered the stocks too much. So Motilal Oswal is bullish on UPL. The target is 30% higher. The stock starts off flat. Similarly, I would believe would be the case for Crompton to JPM overweight. The stock starts off flat. Darshan, what are you spotting?
PNB again 5% downtick. Vakrangi again locked in 5% lower circuit. HPCL is down 5%, but just the clarification, it goes ex-dividend. That is why it is showing a downtick. VIP Industries is down. Sterlite Tech, after the stellar run, is managing to inch down in trade today. Corporation Bank is down. Basically, it's just banks all the way. Among the other counters, overall realty for the second day in a row is seeing negative traction that is coming in. It had a big 20% move the day before, but apart from it, it seems like it's an extremely weak opening at this point of time. On the gaining side, Kitex has managed to gain up over 1.5%. Cipla, after the partnership news that came out, is up 1%. Dalmia Bharat, because of the news of Binani Cement, is up in trade. But apart from it, Neeraj, I can't seem to spot any more gainers as such. It's mainly on the negative side, but I'm not seeing any kind of big 20% cuts that are coming in among the bigger names. So it's mainly a 4 to 5% cut across the board. So it's a weak opening at this point of time, Neeraj.
Yeah, even on the smaller names, Darshan, actually, you're right. So the top loser on the BSE 500 is PNB, which is down about 0.5%. IDB Bank about 4%. Stocks like VIP, etc. have corrected a little bit. Sterlite Tech comes off in the session today as well, so not a great start for Sterlite Tech either. That stock won a large order, remember, but coming off. But now the index is worsening. The Nifty Bank is down 1.3%, and the Nifty almost nudging that 1% downtick mark. So 10,465, the sell on rally template firmly in place. Okay, let's get in a market voice. Pashupati Advani, founder of Global Foray, joins us right now on the show. Pashupati, good having you. Thanks so much for joining in. Good morning.
Thank you, sir.
What's the sense? Is it stay on the sidelines and wait for the dust to settle? Because almost every rally since the start of February, however small it is being sold into.
Well, you know, the challenge is that people are kind of concerned about what's happening in the US, and we are actually following that trend. And, you know, whatever we seem to do over here, we're supposed to declare the growth numbers either today or tomorrow. I think it's today. And the market says it's going to be 7%. So, you know, that should be a good number. But the pressure on what's happening in the US is still happening. I mean, we are seeing, for example, FI is almost non-existent in terms of total value this year. And, you know, against that, you know, we're seeing problems that are happening in the US. People are worried about the numbers. You've got bank chairman in the US talking up the markets, then you've got different issues. Yeah. But I think, you know, rates are definitely going up higher in the US, and that's going to affect the whole world.
The question, though, Pashupati, is that even the week before last, when the US markets did okay, Nifty or the Indian markets didn't quite perform. So while we may be going down and the US markets fall, in the last 1.5 odd months, we've stopped moving up when the global markets move up as well.
Well, you know, I think the rally in the US market was kind of short-lived. It just came up and now it's headed downward again. And, you know, they've got some real issues, because I think that, you know, if you are looking at rates going up, there goes the whole bond market, there goes the high yield market, there goes a source of risk funding. And that's going to change the whole complexion, and that's going to definitely bring down equity markets in the US. And we are a rounding error in size compared to what's going on over there. And I think that's what's, you know, we're just going to get washed away. Because it's obvious that we don't really depend so much on foreign money. We're dependent on the local money. But, you know, the 7% growth should help, but let's see what happens.
What about the PSU banks? Are you concerned about the negative news flow that's coming in? Will it change the entire dynamics of the Indian markets, what the FIs think, what the DIs think? Could this be a bigger problem for the Indian markets?
Well, you know, I think that, you know, when things happen in India, they don't just happen in isolation. And I think there's a lot more than that is still to be disclosed by the banks, and particularly the PSU banks. And I think that, you know, as more and more of the news comes out, it's going to put more and more pressure on the NPAs. And I think the worst is not over, according to me. And, you know, we're seeing, obviously, the two Gitanjali and Nirav Modi at the top of the pile, but then you're also seeing some smaller ones. But cumulatively, I think they're going to add up to a lot.
And with this pressure flow also into the private sector banks, because there's nothing that's come out of them, but like ICICI said, they have no exposure to Nirav Modi, but they still said that they have exposure to Gitanjali. So could this be a problem for private sector banks also going ahead?
Yeah, I think that, you know, it really will depend on, you know, what the value of the collateral that is lying with the banks is, and, you know, how much collateral check has been done. Now, whether it's another bank's piece of paper that turns out to be fake, or it's a real collateral, time will tell. But I think that, you know, the whole system is having some issues, and I don't think that these are the ones in isolation. We read some others about some Dwarka Gems or something is another one, and there's Rotomac, and you know, the numbers are just going to come out. I mean, why? It's a good thing. I mean, you know, you're getting packing credit money and you're able to lend it. Even if you put it in another bank at 7%, you're doing well. And these guys have their money in all sorts of funny places. So, you know, we'll see what happens.
Pashupati, you've at times made it a habit of picking out are picking up falling knives in a really good way. I've seen past instances as well. Do PSU banks present that opportunity currently? Would you go out and buy a PNB? Is my question.
Not yet.
Not yet.
Because I really think that, the worst is still to come. And, maybe a quarter from now, it may even be higher than what it is. But I think that, once the dust settles and you have some better idea, and throwing out the CA regulator is not going to actually solve the problem. Because I think the CAs have done a pretty good job of regulating themselves, even though you now have to call them CA, like doctors. But, I'm saying that, throwing them out and creating a new regulator is just going to push the whole process back, and I don't think that solves the issue.
What about IT and pharma? Is the worst over there?
See, pharma, I think that a lot of the companies are passing the test. I mean, we read about Dr. Reddy. They seem to have got a clean chit, so that's kind of holding in. Sun is still, still got some open issues. But I think as they, the good thing in pharma is that we got a heads up. The bad notices started coming 2 years ago, and now they're cleaning up. So yes, pharma is a place to be. IT, I still, the weakening rupee is going to help, but I think that overall we're going to have a weakening dollar also. And most of the IT companies have their earnings in dollars, and they really haven't changed their business model yet. And it's not clear to me that Trump is actually letting everyone in with open arms. I think there's a lot of rhetoric as to how many engineers can actually go to the US and all, and as apparently he and Modi had a discussion about the 50% duty on Harley Davidson. Yeah. So, maybe there's going to be a 50% cut in H-1B visas, who knows, but I doubt it. So, as he says, Modi's a nice man.
So are you buying anything right now?
No, actually I'm not. I'm just, on the sidelines. I really think that, we may have a major correction.
Major correction?
Yeah, I think so.
Define major?
Major, I think it's going to be led by the US. And I think if you have a 8 to 10% correction in the US, you'll definitely have the same amount here. Maybe a little less because we're a little bit better. We are seeing, FDI. I believe Ghana.com is getting funded by the Chinese. So, I think that we are seeing some money coming in, so that's going to help us because we are a growth economy. But I think, as I said, the US is going to lead the whole world, and it's going to be very interesting to see what actually ends up okay at the end of that. And, you've got on the one hand the FANG stocks which are pulling because there is some IP and value, and on the other hand, you've got the American economy sort of collapsing because of,
Collapsing? Jerome Powell just said that the economy is going great guns.
Yeah, but it's collapsing because he's changing all the business models. He's lowering taxes, but what all the incentives are going to do, which companies are going to, there are companies that haven't paid much tax, right? So those guys are going to get hurt, and they're the main industrial companies of the US. So, and they're the job creating companies.
Okay. So let's, I have a question on ICICI Bank. What do you do here? It's a corporate lender. Corporate lenders have faced the music for the past few years. They were just looking like coming out, but then there are fresh issues as well. Valuations, though, in your favor. What do you do, say, with an ICICI Bank? Using that as an example.
Well, I think, the strategy in this market is to write calls and write puts, because I don't think it's going to get slammed down, but I think that it's not going to jump up. So I think every month you're able to probably make some money doing that, and the premiums are kind of high in both directions because there are people who believe that it's going to jump up, and there are people who believe that it's going to get slammed down, and so maybe that's the way to go.
But you believe it will be range bound if you're saying that right on the...
Yeah, but every month it might be a different range. Okay. It might be a lower range next month, a higher range next month. Ours is not to play it. We're going to lose in some months. But I think that, there's a lot of volatility that's generally come, and the answer is to try and eat some of that.
Pashupati made a killing buying call options of JP Associates when the stock was what, 5-6 rupees?
No, I bought the stock.
You bought the stock, not the option.
Because it was like a call option. It's
okay. Okay, Pashupati bought the stock then. But yeah, okay. It probably favors doing these things.
So, but I think one has to be, general perception is we're still getting SIPs in the market, so that mutual funds are still buying the same stocks again. So they will be the bottom and holding up the bottom of the market. On the upside, as you said, it's been tough for the market to push up, and there seem to be new technical levels. So the answer is to probably eat the volatility by writing options on both sides.
But till March end, will there be such volatility? Because the general trend is because of long-term capital gains coming in, a lot of positions will that were bought earlier will be squared off before March.
No, I don't think so, because the way it's all below the January 31st level. So I think that's your high water mark. So according to me, January 31st level, which is the peak of the market, is actually a cap, because that's above which you may see some selling. I think till that it doesn't really make a difference.
Okay. Very interesting. Yeah, maybe the prices of some of the stocks are off from those levels as well. Pashupati, so one thing is to talk about sectors which have come off. The other thing is, since you're mentioning that we are all tied to the global markets, what about the truly global sectors? Commodities, fabulous run the last couple of years. Is there still more juice here? Would you buy the steel names? Would you buy the...
Yeah, there seems to be activity, but it's like disguised and focused activity. So it's, big steel is doing well, medium steel is not doing so well. We're seeing, medium steel companies in India actually getting acquired because of their assets. But I think that, big steel is continuing to, put quality in and things are working. I've always been a believer in the cement sector in India because I think that the projects are going to finish. And it doesn't matter whose hands they are, but cement demand is going to continue. So that I think is still there. Steel in India also for the same reason.
So are you buying big steel then? Or if you have bought into big steel, are you staying?
Well, today is the last day for the Tata Steel rights, so I'm definitely going to subscribe to that and probably put some more in because I have some. So I'm going to apply for additional. That's a no-brainer. And I think that's worth buying. You're getting it at a slight discount, but I think that it's definitely a stock to own.
I think
going forward.
Let's take a look at Avenue Supermarts. Again, a new high, market cap in excess of 85,000 crores now. Any view on Avenue Supermarts? Because valuations seem off the roof, but still people seem to be buying Avenue Supermarts like there's no tomorrow.
Well, he's a friend, so let's leave it at that.
Okay.
No, I mean, he's done a fantastic job. Let's not take that away from him. Whether it justifies an 85,000 crore valuation or not, I don't know. Obviously, there are people who are seeing merit in it, but it's a beautifully run oil machine, and it's a model that maybe it's going to get acquired by Amazon. They're doing mad things. Maybe they'll come and buy Avenue Supermarkets.
Does he want to sell? That's the point, because there is no float. Unless if Bezos wants to acquire Avenue Supermarts, he has to get Radhakishan Damani on board.
Well, then maybe Radhakishan Damani will be on the global board of Amazon pretty soon. It's possible. Because the reality is he's built a business that is actually, in this economy been able to do well. And I think that, the lessons learned, he can definitely show them. So maybe, maybe there are bigger things for him. But as I said, he's a friend, so let's keep it that way. Wow. I don't own any, so I missed that one. And I don't like buying high-priced, high PE stocks.
Okay, but you're not buying low PE stocks right now as well. You're waiting for the dust to settle.
Yeah, I think there is still dust, a lot of dust to come, and I think that you're seeing all sorts of pressures.
But good businesses last out these dust phases as well, right, Pashupati? I mean, where is it that you would be having your markers on? You may not buy at these levels, but those are pockets that you would want to buy.
No, I still think the logistics pocket for those who when this e-way bill comes in, is definitely going to help. I'm not so wild about automobiles like other people, because I actually think that that shift to Uber and all is actually there, and seems to have it's come into everyone's lifestyle, so people are going to be less interested. And now I actually just read last week of somebody's written that my total car transportation in the US is $10,000 using Ubers, and then he compared it to actually owning a car, and it's comparable. But he says I get to work in the car. I don't have to bother about parking, and there are other sort of pains that are there, so which are no longer there if you use Uber. So, I think it's taken time, and we also in India have embraced it in various forms, because we are embracing Uber Pool like mad. So but I think that lifestyle changes take time. Modi ji is definitely finding that out, because he's putting in policies which the public is not actually adopting with open arms. They're resisting. So that's why it's taking time. And, I guess, he's winning in the Northeast today. So obviously what he's doing in the rural area seems to be making some benefit. So.
Yeah, it's later to win in 2 out of the 3 at least.
So from zero.
Yeah.
So I think that's a positive step for the BJP compared to the last few elections where they've actually got hurt.
Face the music, for sure. Well, a couple of other pockets, Pashupati, the last few days, I know Darshan asked you about pharma and you gave a brief response there. There seems to be a mixed set of news when it comes to resolution, right? Sun Pharma, arguably, the outcome is a lot more positive than earlier before. But then we had Dr. Reddy's getting that EIR too. The haze doesn't seem to have cleared completely.
See, I think a lot of this was politically motivated to try and push India down and not allow generics into the US. But I think that they've also 2 things have come out. One is that Indians have taken the opportunity to clean up and make their plants world class, at least the big ones. The medium-sized ones don't have the cash to do it, so they're potential acquisition targets. And I think that going forward, that's the jump that farmers had on all the other industries. And it's one of our stellar exports. I think that's the main thing.
Okay. Pashupati Advani, always a pleasure having you. Thank you so much for taking the time out and speaking with us. We'll store that comment. If indeed Amazon were to go out and buy Avenue Supermarts, you heard it first here from Pashupati Advani. Nevertheless, take a break on that note. On the news that the Nifty at least is a lot better than what it was about 10 minutes ago. But on the other side of the break, two marquee names. A year since Rajesh Gopinathan stepped into N. Chandrasekharan's shoes, we speak to the TCS MD and CEO about the year at the helm, and of course discuss the road ahead for autos with R.C. Bhargava of Maruti.
job, arey 5 to 9 job, bhag dod, all the time job. The roaming wala job, the deadline wala job, or are you living in the market wala job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back to Indian Open. The 67 points down for the Nifty, about 200 points down for the Sensex. Not as bad as it was in the first 10 minutes, so slightly off from the lows of the day. Anyways, to two big interactions. Let's start off with the auto interaction. The robust demand for cars, bikes and commercial vehicles that started last year has continued into 2018 too, but there are quite a few changes underway in the sector as well, from the government's push for electric vehicles and the e-way bill to rising fuel prices globally. Will automakers be able to maintain momentum at the face of all this? Is the consumption story going to be strong enough to tide over the challenges? Who better to talk about this than the man at the helm of country's largest car maker, Maruti Suzuki? Chairman R.C. Bhargava joins in on the show. We're also joined by Yatin to take us through this conversation. Yatin, over to you.
Thanks for that, Neeraj, and welcome, Mr. Bhargav. Sir, talking about 2018, since we are speaking after a long time, if you could tell us in terms of 2018, how do you see car sales move up, given the fact that crude prices are on a roll? We have seen the fuel prices also move up higher. So in that context, how do you see car sales and auto sales shaping up in 2018?
The crude prices have moved up, but there are also indications that they will move down. They can't go beyond a point now because of the shale oil impact. And the rise in the prices has not had any real impact on the sale of cars. The economy, I think, is improving. It had come down in the first 6 months of the year, but the second 6 months of this year are definitely appearing to be better than that. We'll end up with 6.5 plus overall for the year. And next year, I think all predictions are 7.5%. And any improvement in the rate of growth of the economy does become a positive factor for the automobile industry. My personal guess is that looking at what's happened in the last few months, the 2018-19 year should be distinctly better for the automobile industry as compared to the year which is coming to an end.
Sir, apart from crude, we have seen commodity prices also move up. So, key raw materials for the auto industry, especially for four-wheeler companies like you, steel and aluminum have gone up. The costs are increasing. Of course, in the start of the year, you have seen price hikes coming in from most of the auto companies, including yours. But given the fact that steel prices are still moving higher, do you think you will be able to pass on the kind of hikes that you have seen in the raw material cost to consumers by way of price hikes or increasing car prices? So do you think that is a risk again to the demand, given the fact that car prices are also rising with the commodity costs?
There have already been price increases this year. Usually they happen at the beginning of the year. There have not been very large increases in prices. There have been fairly nominal price increases, and they have not had any impact on demand at all.
And sir,
the car price increases are far lower than the inflation rate, by the way.
Okay. And sir, talking about GST and now the e-way bill, of course for the auto companies it has been a smooth transition, but given the fact that the e-way bill is slightly on the complex side, increases paperwork, especially for your distributors, how do you see this event, and do you think any impact could be seen in the short term, or do you think this will be again as smooth as GST?
I don't think this e-way bill introduction is going to have any serious impact on us. People who, they're doing that to check some of the evasion which has been taking place. That really doesn't concern us. And having this e-way bill, it means another modification in the software, and I think that's it. So that shouldn't worry us at all.
Talking specifically about Maruti now, for the Gujarat plant, do you think 30,000-40,000 unit production is what we could see in the fourth quarter or in the next 3 to 4 months? And on an annual rate, how do you see your Gujarat plant shaping up? Because we already have the first line operational. So, what are the plans in 2018 for ramping up the production from the Gujarat unit and starting the, second phase?
Oh, definitely, because this year, the 17-18, the Gujarat plant will be giving us maybe around 170,000 or so cars. Next year, this first line will be running at full capacity, and they should be able to give us 250,000 cars, or maybe just a little better than that. And the second plant is expected to be in production at the beginning of 2019, which will also result in, I don't know, small number, 10,000, 15,000 cars from that unit. So 30, 40,000 is not a number which makes any big difference to us.
Okay. Sir, talking about the royalty issue, and a lot of investors are keen to know the metric here. If you could tell us what is the new royalty plan since it's pending for approval from the Suzuki board, which is your parent. But if you look at your royalty costs, they have been typically 5.5 to 6% of total sales. So do you think the new royalty plan or the new proposal which you communicated with the investors that could be lower than the previous regime, if you could throw light as to what kind of a new royalty plan is Maruti working with Suzuki?
See, the royalty plan is that the royalty would be in rupees and on the Indian selling price, and would be limited to 5%. Now that part has already been announced earlier, about 2 years ago, and it is actually being implemented on the new products which we are making. In addition to which, the two other additions which will happen in this policy is that there will be a reduction in the royalty rate based on a certain volume of production and sale of each model. Now that number and the approval of this is still pending with Suzuki. It will come. I don't have any doubt that it will come. And the second is that the costs of developing a model in India, the R&D costs with the margin added to it, will be reimbursed, and it will be part of the adjustment on the royalty. So these two things, well, the second thing has been happening to an extent anyway. In the Brezza it happened. So these things are not major issues now. But as reduction of royalty is concerned, fundamentally it is dependent on the new models becoming larger and larger in terms of total sales. As the number of new models and the volume of new models which are being sold becomes larger, the royalty rates will come down, and once all the models are replaced by the new models, the royalty will be a maximum of 5%, but because of local development of models, there will be a certain amount of reimbursement of cost. And when each of these new models crosses 500,000 cars or whatever the number they decide on it, the royalty will come down.
Thank you, Mr. Bhargava, for speaking to Bloomberg Quint and taking out your time. So that was the management of Maruti Suzuki talking about as to how the new royalty plan would be a saving to overall Maruti's financials. Currently, they pay close to 5.5–6% as royalty to their parent Suzuki, which will come down to less than 5% is what the management speaks about. So probably a good amount of saving that we could see moving forward, and also the kind of ramp up we can see to the Gujarat plant that could probably add to the overall volumes and revenue picture. But with that, it's back to you in the studios, Neeraj.
Thanks for that, Yatin. And well, he had big shoes to fill when he took over from N. Chandrasekaran at TCS, but Rajesh Gopinathan is not disappointed, steering the country's largest outsourcer through turbulent times and help it grow in the digital space. Let's get across to Agam Vakil, who has Rajesh with him in a conversation.
Well, thanks for that, Neeraj. As you've already mentioned, I am here with the MD and CEO of TCS, Rajesh Gopinathan, and he's been at the helm for an entire year now. And Rajesh, first of all, thanks for joining us this morning. Well, because I wouldn't say it's been a volatile year, but it hasn't been an uneventful year either. So let me start off with a thread that you've spoken about in the past, and that is the advent of fintech. You had raised concerns, and you had eventually also dispelled some concerns with respect to fintech and disruption on banking. there were suggestions made by you that a lot of these banks could actually adopt some of these technologies and otherwise start a new business with a completely different DNA. That's where I wanted to ask you, what role is TCS playing in terms of this?
So we have been steadily playing a fairly significant role on the transformation from a fintech perspective, but more in terms of fintech adoption into the mainstream banking spectrum and incremental transformation at the bank side, rather than fintech as a separate line of business or a separate investment side. And what we've seen is that during the course of the year, the focus is shifting back. Banks are doing two things. One is they are taking the technology concepts from there and looking at how to integrate that into their value delivery framework. And also they are trying to see how to actually participate and create an ecosystem play. So this forms the theme of this framework that we have developed called the Business 4.0 framework, where one of the big components of it is the focus on ecosystems rather than individual enterprises. And fintech is a great example of where you see large established enterprise leverage its capability and then amplify that by combining with the fintech universe, so that it's not either or scenario, but it is what is the combination value proposition to the client rather than direct competition with each other. So you're moving into that kind of an era, and in that space, when both the adoption inside the enterprise as well as the need of the enterprise to integrate with this ecosystem increases, TCS's participation is very high.
Okay, and Rajesh, you are talking about moving into that era. You also suggested that you are working with clients, you're experimenting with clients to identify successful ideas, especially in the banking financial space again. In that case, what trends are emerging now, and again, what is TCS doing there?
So it's across the whole spectrum. We are seeing trends emerging in terms of front-end transformation, where essentially the whole idea about customer segmentation is getting redefined. And we are seeing narrower segmentation to the extent of a segment of one, and even transaction level areas. So for one of the things that we're doing with the BFS space is how to embed the transaction benefit into, let's say, an e-commerce offering or into a more static kind of a website of another client, and see how that can be deeply integrated without disintermediation requirements. So this whole idea about looking at transactions as the space where segmentation is going to be playing rather than the customer as an entity, that's one big space that we are seeing. Other is adoption of or approach towards risk. Rather than think about risk from a purely mitigation perspective, how do you actually embrace risk at scale and then manage it at scale is another big area that we're seeing a lot of interest coming out and a lot of focus that we are putting onto it.
Okay. Coming now to digital services, you guys just signed a very, very large deal. In fact, if I'm not mistaken, the biggest digital deal of $50 million recently. My question then is, over the next 1 year, 1.5 years, do you expect the deal sizes in the digital services to be still a little bit lumpier, or can we, in your opinion, start seeing progressive trends now that these deal sizes in digital services will start looking at, then this will be a normal size eventually?
I think we are seeing a distinct move towards increased deal sizes. So the way to characterize it is digital is no longer about proof of technology or a proof point of a given individual process. So we moved away from that. We had moved away some time back away from this cool factor. It's not about a pretty website and not about pretty pictures. It's about actually using these technologies to transform core processes. So that's a totally different battleground. And within that, the reason we are seeing larger deal sizes is we are able to stitch together a portfolio that spans the full spectrum. So it is about going all the way from the front end to be able to go to the back end. And how do you see that as the service offering is really where the opportunity lies. And within that space, we are seeing a lot of increased offtake and demand.
Right. So Rajesh, again, I don't know how new this space is for the entire world, but there are suggestions made that there is intensifying competition from relatively smaller Indian companies There are challengers like Luxoft, EPAM, Virtusa coming in the fray as well, and of course, your regular competitors like Capgemini and Accenture also in this place. Then, and considering, when it comes to digital services, we're not always going to see 35%, 40% growth, because at some point in time, we will see that large base come into play. In that case, how does TCS, place itself in terms of strategizing, and how does it deal with competition?
I think a lot of commentary in the market is a factor that the market is saturated with analysts. So we have about 40-50 analysts tracking us, and probably that is true for most of the companies. So this need for a differential point of view, I think is resulting in a lot of commentary that is coming out. Some of the companies that you spoke about, their heritage is a heritage of not being able to defend their own base, and they are essentially adopting delivery models and mechanisms that we had perfected, and that's hardly a reason to suddenly get worried about where the thing is. Others are coming in from a legacy of Eastern Europe and more freelance consultants being clubbed together into larger groups. So none of the ones that you spoke about are per se significantly changing the competitive landscape and creating a great disruption. I think the disruption that we need to be worried about is more in terms of, is there a disruption to the delivery model that is going to come from technology? And that is a spectrum that we need to be focused on. And that's a spectrum that TCS is actually embracing at a scale that is unprecedented in this industry. So we are focused on 3 big areas. We're calling it Agile, Cloud, and Automation.
Yes.
And in Agile, the scale at which we are adopting it, we think that we will redefine the concept of Agile the way we did quality about 10-15 years back. So when we actually adopted quality at scale, the industry had not seen it. I'm not talking of the Indian industry, I'm talking of the entire technology industry had never seen quality adopted at that scale. We are trying to do the same thing to Agile and making very good progress on that space, which is unprecedented in this world, because Agile is being seen again like those old digital projects, individual small co-located teams, whereas we are introducing the concept of location independent Agile and completely changing the approach to it. Similarly, from a leveraging emerging technology perspective, we are adopting in a very significant way a concept called the machine first delivery model, right? MFDM, which is a very unique approach towards development. And again, the trick is to be able to adopt it at scale. So technology-led transformation is where the opportunity is, and we are leading the market in that rather than location-led changes.
Right, Rajesh, coming down to the retail vertical, there is a little bit of a gap in commentary. And again, you have indicated that the worst is behind for retail. But there are again a lot of reports that there could be some lumpiness, there could be some more volatility. How are you gauging this trend, or is it that this trend is different for you as TCS as compared to the rest of the industry?
No, I think the important thing is not whether it will be lumpy or not. The important thing is that when we look at our client set and the people that we have worked with closely, we have seen a transition from a period of not knowing how to react to the onslaught of e-commerce to being able to adopt e-commerce and use that as a lever and to move the basis of competition away from the traditional basis of competition. So traditionally e-commerce competed essentially on a value proposition of price, right? Yes. What we have seen retailers being able to do, and we have worked very closely with many of them, is to change the value proposition to customer experience and to think about the transaction not as the individual sale of that product or a good, but the lifetime ownership of that product. So a great example is what we're seeing in the home electronics space, that the question is not can you buy the TV cheaper or better in some other place. Right. It is about, you just don't just buy the TV, you are now having an entire household full of interconnected devices, and somebody who can actually help you navigate that spectrum has the contextual knowledge of understanding what you have and therefore what should be the next incremental one, to make sure that it works together, is where the sale is shifting to. And that completely changes the competitive dynamics. So we've been able to work very closely with retailers like Best Buy, with Home Depot, and help them in this digital transformation journey. And that's where our commentary is coming from. And we are quite confident about that shift. And we think it will come in multiple categories in retail. We are working across a fairly large spectrum. The other large deal that you spoke about, coming from Marks & Spencer, they are going through a similar transformation at their end. And the CEO is very, very focused on that digital agenda. And we are helping them in that transformation. So you're seeing category after category in digital, or rather in retail, shift to a basis of competition where they have more than evened their battlefield with e-commerce. That doesn't prevent some amount of lumpiness, but essentially our commentary is based on this agenda and our ability to participate and lead that transformation agenda.
Okay. Then coming down to the deal that you signed with Rolls-Royce on Internet of Things, and you just spoke about interconnectivity of different devices. I wanted to understand what role TCS is playing here and what is the scope of Internet of Things eventually as we move into the next few years, for that matter.
Our role here is end-to-end and transformative. So we have developed a framework, the TCS Interconnected Universe framework, which we call TCUP. That's being adopted at scale by Rolls-Royce. And it will essentially form the fabric that will help them stitch together this common integrated platform that they're trying to build out. The opportunities are practically limitless, both in the Rolls-Royce case and in a more generic sense. I think as we move more and more towards interconnected devices, we will be able to optimize the application of many of these technologies for different use cases. So you will see more complex services getting built on this fabric. What is coming in place is, in many ways it has been spoken about before, that you are first seeing the network coming in place. The network itself will form the fabric on top of which many new services will come. So we think it will be a transformative scenario, which is why we have put a very significant amount of management bandwidth to drive the IoT agenda. And we are participating across a very wide spectrum of companies in IoT.
Fair enough. Coming down to what potentially could be plans in the near future, that is the synergies that Tata Elxsi or Tata Technologies, possibly can offer TCS. And I'm not suggesting that the merger is on cards, or I'm not even going to ask you that. But what are those synergies that can complement TCS as we move in?
I don't want to comment about individual companies, but as we have always maintained, we are focused on seeing whether there are differential capabilities that can come from services, capabilities that can come from industries or from market access. And if we find appropriate opportunities at a right price point, we are always game. But as you know, acquisitions are not our key growth focus. We don't have a stated strategy saying I'm going to spend so much money and X percentage of my growth will come from acquisition. We are not in that business. We are primarily focused on organic growth, and we continue to stay to that as our primary strategy.
Okay. Then let me come down to your margins, and again, I wanted to understand what is it that's going to eventually drive TCS's margins as we move into the next couple of financial years. Because from what I read is that TCS has a very healthy hedging book. So if it is not going to be currency, and if you leave currency out of the picture, what is it that's going to drive it to your targeted range?
Our operating margins have never been impacted by our hedging choices. So the way we report our numbers, hedging gains or losses are shown below the operating income. So what you see at the operating level is the raw set of numbers. It's business and wherever the currency is. And that's where you see it flow through. So the margin equation is about scale and participation in newer areas. I think what's most important in our industry is that you have to stay relevant to the customers and stay relevant with the changing technology trends. In any given technology trend, as it scales up, you will see margin defense. In the early part of it, you will find investment that impacts margins. And at the later leg of that technology, the commoditization erodes margins. So this, the continuum is given in this industry.
Right.
And as we keep on participating in newer areas, like I spoke to you about agile, about automation, etc., or the whole digital scale that you spoke about, that is where the margin defense will come from.
Okay, well, fair enough. So then let me also address your legacy services. Of course, we've seen some deceleration, but this, to a certain extent, I understand that they're also undergoing through a meaningful transformation. That said, how are these relatively larger clients who still work in the traditional way using agile and cloud for transformation, and how is TCS helping them?
We are very excited about what is going on in that space. So, at a very conceptual level, what we are seeing is that clients want to have a transformation agenda and they want to have an optimization agenda. And agile and cloud is the way that brings it together. So, they are trying to essentially optimize, where our value proposition to them is how do we reuse the enterprise assets that currently exist, applications, application functionalities, data, put them into platforms which can be consumed across the enterprise. And cloud is an integral part of that transformation agenda. Having done that, having exposed those capabilities, how do we make them consumable by business in a more dynamic way? And agile as a development methodology is the one that actually steps in. So we are essentially seeing organizations go through a multi-layered transformation agenda. They are converting their existing technology assets into platforms that can be consumed internally. They are changing their internal IT and business delivery teams into more integrated teams with us. So we are going and becoming much more embedded and much more closer to their business design. And we are using agile as the methodology to drive that transformation agenda. So we are seeing this across a very large spectrum of clients. Even the deals that we have announced is an example of this. So cloud and agile with automation as another layer that comes in between. All three, the three focus areas that I said, is very core to the transformation in the way both technology is delivered as well as consumed by our client set.
Right. Fair enough. And my final question, Rajesh, is then, you finished the year. What are the ongoing challenges that you're facing right now that you expect to face further on, and how are you dealing with those challenges?
I think both from a challenge perspective as well as from an opportunity perspective, technology is becoming so integral across our customer set that solution sets are much more integrative. So the real opportunity is that we see the ability to stitch together many components inside TCS to form an holistic solution. And they are traditionally siloed by verticals. So you have something called a high-tech industry, you have banking industry, you have, let's say, CSPs as telecom as an industry, and you have manufacturing. But if you take connected car as an opportunity, it actually cuts across all these industries. So the opportunity is that we have capabilities that are across the entire landscape. And the challenge is to make sure that we are able to bring them together to address the opportunity at hand without losing the efficiency that we have had. So that's the next leg of this transformation that we need to do.
Fair enough, Rajesh. We wish you all the best in tackling those challenges as well as continuing to take and lead TCS ahead. But thank you so much for your time. And once again, all the best for the future.
My pleasure. Thank you.
Thank you.
Thanks.
बड़ों